Just a moment. Okay, you're live.
Okay,
Just a moment.
so let's start again. Good morning, everybody. It is now 8:04. We have more than a quorum for today's FACT meeting, so I'd like to call the meeting to order. All FACT members are present, with the exception of Frank Brown. I have not heard from Frank as to whether or not he'll be joining us, but occasionally when he does join us, he's a little bit late. So I don't want to hold up the meeting for Frank's arrival, so let's get started. I sent out an agenda by email for today's meeting. Have you all had an opportunity to review it?
Yes. Yes.
Okay. Any revisions or corrections?
No.
Seeing none, hearing none, I'll entertain a motion to accept the agenda for today's meeting.
So moved.
I second.
Okay, motion made and
My name is
seconded.
Faye Curry.
Okay, and it was made by, who was the motion made by? Bob Burden? Okay.
Yeah.
Any discussion? Hearing none, all in favor signify by saying aye.
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 Okay, motion carries. Let's go down to Roman numeral 4. Roman numeral 3 on the agenda, approval of minutes. I sent out by email minutes of our September 10th meeting. And thank you, Kim, for preparing those for us. Have you all had an opportunity to review the minutes from the September 10th meeting?
Yes.
Yes.
Any suggested revisions or corrections?
No.
Hearing none, entertain a motion to approve the minutes of the September 10th, 2020 FACT meeting.
So moved.
Moved by Bob Burns, seconded by Jim Cardillo. Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Opposed? The ayes have it. Motion carries. Thank you. Let's go down to item Roman numeral 4, reports. And I'd like to start with the Audit Committee. Jim, anything from the Audit Committee this month?
The October Audit Committee meeting occurred. The chair brought in the director of the Annapolis Department of Transportation and also the manager of the Management Information Technology Department. They gave presentations to the Audit Committee. The Audit Committee, has 2 vacancies, one of which was filled at the October 26th City Council meeting. And there is enabling legislation for the Audit Committee that is under revision and should be available at the next City Council meeting. Finally, the Audit Committee has discussed the recommendations coming out of the first external audit, and implementation will follow. And we are still in discussions on the next external audit to be performed on to determine, number 1, the objectives, and number 2, which specialized area of the city would be subject to the audit.
Okay, thank you, Jim. Any questions of Jim? I see Russ, or Alderman Arnett has his hand raised. And Faye, did you have your hand raised as well? No. Okay, so Alderman Arnett. Unmute yourself, please.
Jim, the city council has yet to receive the report on that first audit. I don't know what's going on, but we haven't seen it. I don't really even
Let's see.
know what the result.
The report was dated May 21, 2020. So the report went final in May. We identified 31 different recommendations from the external auditors. And at this stage, the Audit Committee has requested a response from city management for each of the recommendations. Oh, go ahead, Dave, go off of mute. There you go.
Are you finished, Jim?
Yes.
I'm sorry, I didn't mean to interrupt you.
No,
Yeah,
that's
so we're planning at the meeting we have the next audit committee meeting on Monday next week. So we're going to provide an updated response that will involve input from both Director Dickinson and Director Trader on responses to the audit findings. I'm not sure that we have them all, are going to be able to address them all, but we're going to address what we have been able to put together so far. So that's a work in progress.
But David, cannot the council see the audit report as it was rendered?
Yeah, I don't see any reason not to, not at all. There's nothing secret about it. We can send it out if you'd like to. I thought you'd want to see the comprehensive package, so that's why we haven't forwarded it yet with
we
all the
do.
responses. Yeah.
Yeah, I think we
Okay.
do, but we'd like to see, we haven't seen any of these audit reports, so just to see what one looks like. But I mean,
Absolutely, we can provide that.
thank you.
I agree. I think it's best contextually to see the audit report and recommendations, and then the response where appropriate, to fully understand.
Okay, thank you. Thanks on the audit committee report. Let's go to finance department. And Jody, let me pick off these things in a particular order. Let's do numbers 1 and 2, equipment loan and bands issuance status and bond authorization ordinance.
Okay, the equipment loan, if you recall, 2 years ago, we entered into a equipment loan agreement with Bank of America that we put that out for bid, and they gave us the most financially advantageous bid. We have taken that equipment loan out in 3 different tranches, and the first 2 were rather sizable. This last one we just did in September was the final piece. We borrowed $584,000, and that is to fund 4 pieces of equipment: a backhoe, a pickup, a medic unit, and a large dump truck. And so those payments, the payments on that loan are structured over the lives of the respective equipment.
Okay.
Now I'm trying to find my closing memo for here we go. And on November 5th, we closed a band line of credit arrangement with JP Morgan Chase. Again, that went out for bid, and they gave us the most financially advantageous bid, financially and term related. This is a line of credit that we're going to use to fund capital improvements for the next year at least. So we don't have to sell long-term bonds every year. That's a very time-consuming and costly process. So we decided we'd do that every other year. We borrowed, this line of credit totals $12,600,000. It will be used to cover all projects, whether water, sewer, stormwater, general projects. All of them will be able to draw from that line. The rate on the ban is adjustable. It floats with the LIBOR, the daily LIBOR. So when we draw down the balances, the amount that's due is subject to the daily LIBOR. And I don't know if you have any other questions. In a year, we plan on issuing long-term bonds to pay off what we've borrowed on this line of credit and any new money that we need for ongoing capital projects.
Okay. Alderman Arnett.
What is the LIBOR rate right now?
Oh, I can't tell you. It changes every day. I'd have to look it up.
Well, within 10 percentage points.
It's see if it's on this memo. I have the closing memo in front of me, and even that doesn't state the rate. I'll look it up for you right now.
Thank you.
It's
Bob.
low.
Oh, I'm sorry, Bob Burden.
Yeah, Jody, what is your expected fluctuation of the LIBOR rate given past history, recent past history? Looking forward.
They expect it to stay very low over the next 12 months. What I've got right now is The current LIBOR interest rates, hold on a second, let's see. Well, hold on, way too much information there. 0.14,
Okay,
that's the 1 month rate. I was trying to figure out if that, so if you're borrowing out 3 months, it's 0.21. 2%, maybe more close to the 12-month rate, borrowing for 12 months. So, yeah, and I'll get back to you with what it is today. When we closed on the line the other day, we had to draw $50,000 out, and that's going to be used to pay the closing costs of the borrowing. There'll be a little bit left from that, and we'll apply that to a project. And I'll tell you what rate that was applied. I'll send an email out telling you what rate applied to that transaction.
okay, and this is compounded interest that we're paying?
So yes, the interest will be due on the amount, the balance that's outstanding.
And compounded?
No, I'm sorry, no. We pay interest every month. So nothing will compound.
Jim, do I see your hand raised?
No, sorry.
No. Okay.
With my-
Any other questions of Jody on that portion of her report? Okay, next, status of the annual audit, Jody?
I'm in the process of pulling together the final fund financial statements. I've been doing the last very complex calculations myself. I've been working on that over the last few days. I'm hoping to have a draft together by Thanksgiving, but I'm thinking I'm going to have to involve the auditors as far as preparing that document for me. We prepare all the financial information, and I'm going to need their help pulling the document together because I just don't have the time on my schedule to do that this year.
Is this something you did internally last year?
I did it halfway internally last year, and at the end I needed their help to get through it.
Okay.
The tail end of the financial statement process is very complex. Not only are there calculations that are very, very complex, that you have to pull together the fund statements, combine them, and then you have to prepare the statements on a full accrual basis, which they call the government-wide statements. And at this point in time, I'm the only person on staff that can do it. Before I took this office, the auditors were preparing the entire thing, including the roll-up statements. And I don't want to do it that way. I want to prepare the numbers at least, because they're supposed to be they're supposed to be the city's numbers. Management's taking responsibility for the amounts. And so I've been for 18, 19, and 20, I've been preparing the numbers, and the auditors have been helping with the report.
Okay. Questions on the status of the 2020 audit? No? Okay, let's move on. I guess let's talk about the big issue that I think is on a lot of people's minds, and that's the updated revenue projections and potential expenditure modification to address that. And you'll note that as I was preparing the agenda, it was a time that this issue about the e-tracket replacement hit. So that's on there as well. And what impact that unexpected, significant expenditure is going to have on your projections and your game plan moving forward.
Okay, what was the first thing?
Well, we're talking about the updated revenue projections and expenditure reduction.
Right,
And,
okay.
and then what I said was, as I was preparing the
Right,
agenda.
that e-tracket thing kind of tagged along with it. Okay, so as far as we are due to give an updated revenue and expenditure projection to council for the amounts as of the end of October. I have not done that in particular yet, but I will tell you that the only thing that's changed as far as the expenditure is concerned is I believe we're going to be able to take another health insurance premium holiday in the spring. When I finished up the FY20 fund statements for the health insurance fund, it revealed that there's a surplus in there again. Not a lot, not the same as last year at all. It's about half the size, but a premium holiday will be maybe 2-3 pay periods, but it will allow the general fund to hold back on the contributions, the employer healthcare contributions that we would have made towards the fund as well. So I did some quick and dirty estimates. This is still subject to audit, so I can't put it out there as final yet, but we might save as much as $1 million in the general fund. So that'll help curb our expenses this year. So I'm hoping that does a lot to kind of take a chunk out of this FY21 deficit that we were looking at. But
So
we're
what
still-
are we, I was gonna say, what are we looking at as of now?
Well, if you took my original 3.3, remember the fire department got a grant to cover some of its self-contained breathing apparatus that it's planning on buying. And that brought it down to 2.8. So I think this brings it down to 1.8-ish without having the dollar amounts in front of me, about 1.8. And then we still haven't looked at how we might be saving in other aspects. For instance, as we don't roll out rec and parks programs, are we able to save there as far as expenses are concerned? Those, we haven't taken those into consideration yet, whether or not we're making other operating savings because of our lack of 100% operating now, not having the buildings open, that kind of thing.
Okay, let me go to David, and then I saw Bob Burton had his hand up. So David, you go ahead, and then I'll turn it over to Bob.
The other thing we've done, the obvious things, right? We've told all of our department directors to be very frugal and prudent. They're normally that way anyway, and we normally underexpend the budget, but especially so this year. We're also holding all general fund vacancies a bit longer. We took a big vacancy factor reduction to get the budget balanced. We're going beyond that to hold the vacancies that we have. Like I said, we're just slowing down the process so that we'll achieve additional savings there as well. So those are a couple of other strategies that we have.
Okay, Bob.
Yeah, Jody, just a couple questions. Referring back to the health insurance premium holiday, do we normally carry a surplus in that particular account, or is this an outlier that a surplus exists? And if so, how did that surplus occur?
So the money going into the fund, let me back up to tell you, our policy is that fund can include a certain number of months of expenses in it as surplus at the end of any year. If it goes over that amount, we have to give money back. It's not supposed to accumulate a surplus. It had not yet until I think in 19 we built a little bit of a surplus, and then in 20, in 19 we had a surplus. It was, the financial statements showed that it was significant. So in the spring, we gave a premium holiday to employees and the city, and it was, I think it was 7 pay periods that we were able to shut off health care premiums for employer and employee. And those are the sources of funding going into that fund. And we pay the health care, we pay the healthcare costs ourselves. We're self-insured. So the claims experience, we had 2 really good years of claims experience. And I don't know if it's it for any particular reason. I mean, there's individuals that have high health costs, and those can go up and down with employee health care. But our consultants tell us that sometimes every 10 years, I think they said, you'll have like 3 good years, and you don't usually see 2 good years in a row. So we've had 2 good years of claims experience with the city. 20 was another good year, and like I said, it looks like we gave back the surplus, we added some more. which means what we're calculating as premiums was more than enough to cover the healthcare actual cost that we incurred. And what we're supposed to do according to the policy is to give that back when it exceeds that ceiling.
Okay, so really it's the claims experience that contributes
Yes,
to
and
the surplus.
we have taken some measures to curb those costs. We have excellent healthcare consultants that help us with placing our healthcare services. They've set us up in FY21. We have a new pharmacy benefit manager that's supposed to be saving us a lot of costs on our prescriptions. We're trying to iron out some wrinkles right now there. We're having some bumps with that transition, so we're trying to fix that now. But that's going to save us costs in 21 as well.
Okay. Say, David, David, you
ahead.
mentioned that there will be an additional savings because of the vacancy factor that you're going to extend. Can you put a dollar figure on what that additional savings will be? I'm sorry, I can't hear you.
No, we don't have an estimate of that right now. We're not seeing a lot of vacancies come through. I'm holding a couple right now from the police department, but we don't have a good estimate. We'll keep track of that as we go forward.
Okay, so when we were looking at a $3.5 million shortfall, that appears to be coming down to about 1.5 million. Is that correct, Jody? Given
I'd
your
say
numbers?
more like 1.7, 1.8.
Okay,
And what we need to do is my evaluation of the actual activity up through October will tell me whether revenues are still where I anticipate them to be annually, and then any other expenses that we may be saving on because of the lack of full operations.
okay, so that's roughly about a 2% projected shortfall compared to budgeted revenues of 82.8 million for this fiscal year.
I'm sorry, I don't understand your question.
Yeah, that sounds right, Bob.
Okay,
2% of the 82 is about 1.6 million.
okay. Now, when we start looking at the next fiscal year, I've seen reports in the press, and I don't know how accurate those are, but a projected $10 million shortfall for fiscal year
Okay.
2022.
So one of the issues that we're trying to solve this 21 problem, and we're solving it, but we're solving it with one-time sources. So we're not going to, as we continue with this level of expenses going into next year, we're creating a structural deficit in the 22 budget. And so when you get to 22 and we have projected salary increases and we have to increase our police and fire pension contribution rate again, when you put all those projections together, 22 not only accumulates the shortfall from this year, but we're going to have more added to it because we're increasing other expenses. And that's where it's not 10 million, it's 9. It was 9 when you take into consideration the structural deficit that we are facing this year and rolling it into next year. Plus we're adding another 5.2 or 5.3, I think it was, that we're adding next year. So right now we're working to try to figure out how to curb those expenses into 22.
Okay, so if my math is correct, you're looking at potentially with the rollover and everything about 14 million. Is that correct?
What do you mean 14 million?
Well, you said 9 plus.
No. 3 million from this year. Remember, we're starting out this year. We're saying we have a $3 million problem. And when we continue the same level of salary and other expenses into next year, we're fixing this year with one-time fixes. Like this healthcare premium may not reoccur next year. This premium holiday may not reoccur. So when we build the expenses of salary into the budget and continue it into next year, we face the same expenses next year, just building higher, but the revenue may not reoccur. I'm not sure if I'm being clear about it. So we're building a structural deficit into next year. That's where that 9 million came from. Once you, but what we don't have any sources for that for next year. We're trying to trim that down.
Okay, so you have a structural budget deficit going into 2022 of $9 million.
So that 9 million was also included the expense of the capital project transfer from the capital reserve fund. When you're looking at a pure operating structural deficit, you can take that out. So that's a one-time expense. So ongoing revenues and ongoing expenses in 22 are facing a $7 million structural deficit when you look at ongoing revenues and ongoing expenses. And like I said, some of that's built up from this year. And we're also facing increases to our salary and benefits items next year.
Okay, so we're expecting a $10 million potential shortfall next year or not? Or a $7 million or a $9 million?
So
I'm just trying to land on a figure.
Here's what I'll say. If you did not give any money to the capital projects fund, you would have a $7 million shortfall.
Okay,
But and I just don't know if that's realistic.
okay.
You
So
know
the
what I
7
mean?
million is not a realistic figure then. So what is the figure?
Well, no, it's 9 million, but you could say that's coming from a capital reserve fund. And every year as we close the year, we add money to that capital reserve fund. So we should have enough in reserves to cover that $2 million.
Okay.
So I would say the number that you're curious about, the ongoing, as far as operations is concerned, is the $7 million.
Okay, so we walked into 2021 with $23 million in overall fund balance reserves. Is that correct?
So I'm not sure where you're pulling the 23
Well-
million. That was my projection at the time.
Okay, well, I'm going back to your last
I-
projection that you gave back in October, I think it was, or
Okay.
back when you
Okay.
gave the presentation, you projected $23 million in fund balance reserves across the board, across all fund balance
Mhm.
reserves.
Mhm.
Okay, and we're looking at a $7 million projected deficit depending going into 2022. Is that correct?
Yes.
From what you indicated. Okay, so
Yes.
that's roughly probably somewhere around 8 to 10% of projected revenues for 2022 that that the deficit may be attributed to.
I guess.
Okay, well,
I'd
what
like
I'm
to see
trying
the
to
numbers
get-
that you're looking at before I comment
Well,
one way or the
Yeah,
other.
what I'm looking at is you projected in 2021, you projected $82.8 million in revenue.
Mhm.
Okay.
Mhm.
Now, assuming that holds going into 2022, okay, and which we don't know that it will, and you're
Right.
projecting a
We
$7 million.
have projections. We have projections that it will increase for the real property taxes. But other than that, it's virtually flat,
Okay,
other than the property taxes.
so then when you factor in a potential $7 million deficit, then you're looking at somewhere between 8 to 10% of your projected revenues then in terms of deficit. Okay,
Mhm.
so that's what the city finance committee is going to have to take a look at when they start looking at the budget for 2022.
So we
And
are
how do we
already taking actions to try to address that. We have
Okay.
met with the union representatives and we've laid out what we're facing for next year and showed them what we need to try to offset. And, we're waiting for them to come back with their suggestions.
Okay, have you received any guidance from the state as to how property tax receipts will?
We are anticipating
in.
again on our 3-year revaluation, reassessment, that we're going to see 9% increase in the values. We can only take that in over 3 years. So we would see a 3% increase in the assessed value. Assuming the tax rate stays the same, that would increase that revenue source by 3%.
Okay, I'm talking about receipts. I'm not talking about, valuations and so forth.
No, we haven't received anything about how property tax receipts are coming in.
Okay, so we
As far
don't
as
know if there's
impact.
going to be any.
I think that will be a delayed impact And I think we won't see it until the people are filing their calendar 20 tax returns. And when it comes to the tax sale in June, we'll also see if there are properties that are, a lot of properties coming to tax sale.
Okay, so we don't know if there's going to be any potential delinquency in terms of cash receipts coming in on property taxes then, is that correct?
Correct. We've
Okay.
just had our first round of payments came in September. That was the same size as last year. I mean, it's staying right on track with last year. I don't suppose we'll know the answer as far as delinquencies until June.
Until June of next year.
Some foresight on it, I don't know, but you've got till December to pay the total, and then we start accumulating the properties that haven't paid the taxes.
Okay, have we factored in any potential for property tax receipt delinquencies next year?
I factored in a discount for the personal property taxes that business pay on their personal property. I discounted that 10 or 15% off of what I normally would have.
Okay,
So,
that's what I thought as well.
and I don't even know if that'll hold, if there'll be more, if businesses start going out of business and we don't have that personal property tax anymore. That will have a delayed impact as well.
Okay, what about real property tax receipts?
Well, that's what I was referring to before. I don't see any change yet on the real property tax receipts. And those are the ones that we're probably going to see in June. That's what I was talking about before.
Yeah, because the bulk of the properties, particularly in the commercial sector, are rental properties, if I understand correctly. And now, of course, the owners of those properties need to pay their property taxes, but the cash from that comes from the rentals and so forth. So, my question where I was driving at is, should we potentially not be factoring in a delinquency factor for real property tax receipts next year?
I could. I don't know what it is yet. I mean, if the state puts out something that says there's what we're anticipating, we'll factor that in.
Okay, well, if that does occur, that's going to impact cash flow for the city then next year at some point, if it does occur.
If it does, the properties are supposed, anybody who doesn't pay their taxes, their property taxes this year will go to tax sale.
Mhm.
And theoretically, at tax sale, we get our money one way
Well,
or the other. And
yeah, but
that's
it's delayed.
theoretical. That's theoretical. In
But
a
it's
time like
delayed.
this, I don't know if all those properties will
Okay.
be covered.
Ross, you're the chair of the Finance Committee of the City Council. What is the Finance Committee doing when we're looking at the type of numbers that we're looking at? It would appear to me that each month that goes by that we don't have a firm plan in place and actions not being taken, that we potentially could be digging ourselves into a deeper hole. And, the reason I raise these issues, Ross, is that you, Fred, Sussman, and I go back to, about 13 years ago, when the city was in some pretty difficult financial straits. And what we're potentially looking at now could equal that, if not surpass it. And would like to know what your take is on this and where you, as the chair of the Finance Committee, are concerned, and how you may be trying to emphasize to the City Council that, sitting here and discussing this is fine and dandy, but we got to make some decisions. And delaying any decision potentially could be putting the city in a more difficult financial predicament.
So thank you for
I'm
that.
addressing Ross.
Thank you for that question, and I want to thank the administration too. Bob, we've already had one budget retreat where we started talking about from each of the council members spending that they would like to see in their award, but also then talking about all of the issues that are facing us in this current fiscal year, and more importantly, in the next fiscal year. We had a long agenda. We only got about halfway through it, I would say. We got right up to the point about talking about what do we need to do if we need to make cuts. So today, we're having a follow-up meeting where I believe, David, if I'm correct, we're going to be talking about the police department and also this new Office of Community Services. With police, we're trying to change from a model of arrest to assist. And Alderwoman Finlayson and I noted that the city doesn't really have assist. Mainly, we've been asking police officers to be part of assist with their activities in the community, like Eastport working together and so forth. And we feel that's not sufficient. We have found some grant money to hire a social service person who will start that assist work, but also help us come to an understanding of the kinds of resources we need to really provide assist. And initially, I think mainly assist will be get people to the right places for county services. All of those things are new spending. So we're going to have another meeting after today, I believe it's the 19th, where we're going to get back to a discussion of what do we do if we, just for the sake of argument, don't get any new taxes, are not going to change the tax rate, where are we going to reduce spending? And I know that is a very tough and uncomfortable discussion. Sheila and I have been having a lot of one-on-one discussions. I have to say I'm quite pleased that she's willing to talk about these unsavory things. And we need to remember, and I'll let Director Gerald speak to this too, every time we talk about these things in public, we're talking about staff jobs, and we're talking about a very uncomfortable time, both with the virus environment and the political environment, and then to pile on talking about potential reductions in staff is not a fun thing to do. And when you add to that, this is coming in an election year. So in June, we will have to strike a budget, and in November, we will have to stand final vote. So there's an awful lot of pressure. And I'll just take an opportunity to say, boy, that's why we really could use the spending affordability model, because to me, that looks at what is the tax base? How far can we drive expenses given the tax base we have? And what happens is when we don't do what we're doing now, and again, thank you to the administration, having these October and November meetings to talk about the 22 deficit situation, we get right up to the budget. We say, gee, if we had more time, we would cut this or that or those things, but we can't. So we're going to have to raise taxes 15 cents per hundred or whatever it is. And then work on structural changes to the organization of the city and the delivery of services. This gets even more complicated because, and I see it on the agenda here, if we're talking about shifting services from the city to the county, first of all, we need to recognize that does not cut our citizens' tax bill. It just shifts the pocket that it comes from. There may be some economies of scale, but we're also assuming that the county will take them. And I don't know that we have any guarantee that we can do that. And I think that's something that we really have to speak about now and realistically now, because if the county says, sorry, we're full, we can't take that on, then do we just drop that service? I have been pushing that we need to look at where we spend the most money. And that tends to be places where the sacred cows reside. But I'm convinced that there is low-hanging fruit in public safety in particular, but also possibly in public works. And that's where we spend most of our money. All of the rest of our money are in much smaller programs, transportation, parks and recs, finance department, which gets the burden of all of the different funds that we have to carry there, like self-insurance funds and health funds. It seems to me that we have to really look at where the money is to find the money. And we may need to be talking about, do we have dogs? Do we have a SWAT team? What are the kinds of things that really ought to be provided at a higher level, or could be, than the city? So you get the flavor of the kinds of uncomfortable topics that I would like us to address on the council. if we had this spending affordability kind of model that would say you're already overburdening your property tax compared to other municipalities or other jurisdictions or whatever, that is an important guiding light that says you can't just wait to the last minute and drop a dime on the taxpayers. You're going to have to face up to real shortfalls. I'm very pleased to hear the finance director mention the structural deficit. I think we've had a small one for a long time, but now we're going to have potentially a much bigger one. So the direct short answer to your question, you know I'm not big on short answers, is we are having council level meetings with the help of the city manager and the finance director and all the other staff. We're talking about the tough issues now before we go into the budget making. And again, I want to thank the mayor and David in particular, because this is not the usual pattern. Usually the mayors hold the budget close hold until May when they give it to the finance committee. And then we have just a few weeks to work on it. And this administration is putting us ahead. The finance committee is also relinquishing some of its powers in saying it's really stupid for the three of us to do this work and then take it to the council. We really need to have a council of the whole looking at these issues. They're so big, so complicated, and we spend a lot of time getting everybody caught up to all of the hard work that the finance committee drags the administration through, poor Jody and her staff in particular. And then it's like a whole new day when we finally get it to the council. So we're trying to change that method of operation. So again, sorry, I'm not given to short answers.
Well, you know, Ross, and let me just close by saying that the delay in the city council taking action on what is apparently obvious coming down the road here is putting your city manager and your finance director in a very difficult situation. Every day they're looking at how they can make ends meet, and they can't really do anything of significance without the appropriate action being taken by the city council. And I think that when we go back and look at this budget that we're in right now, there were ample pieces of information that were made available to the city council of the potential challenges that we were looking at. And it appeared that the city council decided to take a wait and see attitude rather than become more proactive. Now, I know that you're very tuned in to these issues and you're very concerned, but you're only one vote out of all the votes on that city council. Nonetheless, you chair the finance committee and you have two other city council members there. And somehow there's got to be some agreement as to a way forward here besides just the discussions. Now, I know the politics involved, and I know that a budget, as much as being a financial document, is a political document, but nonetheless, you're really putting the city manager and the finance director in a very challenging situation, you know, without the city council recognizing the potential magnitude of the challenges ahead and what needs to be done proactively. And, you know, when I sit here and read this and I see this, I do have a lot of empathy for both David and Jody, and I'm sorry, David and Jody, for what they're confronted with. And I just want to, you know, Ross, I just really want to impress upon the city council that, look, you know, sometimes the time for discussion comes to a point where, you know, some decisions have to be made one way or the other, good or bad, right or wrong. You know, there has to be a direction so that your staff, you know, can be able to appropriately move forward and implement. So that's all I have to say. Again,
Right.
Thank you, Ross, for your attention to this, and I appreciate it, and I'm sure the others do as well.
And I think we pointed out in the last finance committee report to the council in numerical form, in tables, the fact that our property taxes, and we just heard it again, are expected to go at 3%. Our wage bill is growing at 9%. That is not sustainable. Those two amounts are comparable. I pointed out how this deficit has been growing. I point out how we're really balancing the budget, in my view, on external grants, which may or may not be coming forward. I worry about the glut of CARES money giving us a false sense of security, but we have over $6 million of grants that normally come in, and that really does backfill the tax and fees and fines revenue with grant money. That means to me we're living on the razor's edge, and we're dependent upon a dole from other entities. I can't help but believe, given those spending at the federal level, that there isn't going to have to be a big pullback on that kind of money going out there. Our national debt is just horrendously big. Now, I know we owe the debt to ourselves and the Chinese and some other parts of the world, but still, it's getting just so out of hand. And we need to be worried about that money drying up. But even with that money coming in and counting for that, 22 still looks like there's going to be a big shortfall. And I just don't believe we can go out to our constituents and say, pony up. We're going to have to show a good faith effort on how we got more efficient and how we made some tough choices between doing these things and no longer doing those things. And we really have to be very careful in how we do that. But I think it's upon us now. And I did not vote for the last budget because of my concerns. And I think there were 2 or 3 of us who did not vote for it. I think that number may get larger as people think about facing constituencies with a big new tax bill. So we'll see, but the pressure is on.
Okay, thank you very much, guys. Very good discussion. David, I saw your hand up earlier. Anything you want to add at this point?
I would just add, in defense of the council, which you write this down, you usually won't hear this from me, but in defense of the council, we expected, when we were putting the budget together in the spring, we expected that COVID would mostly be behind us by this time of this year. And our budget was based on that. So it's difficult, and COVID is causing a lot of these problems. We have some structural deficit clearly, but COVID is causing most of this. And so, you know, it's difficult to blame either us or the council for this situation continuing. And we're doing the best that we can, and we've projected it going forward, even though, you know, there's signs that there may be vaccines sometime in 22. But I think it's prudent that we projected the COVID shortfalls will continue going forward. So again, it's, you know, hindsight's 2020. It was difficult last spring to project that this was going to keep going as long as it's clearly going to.
All right, thank you, David.
Just one moment. David, nobody's casting blame on anybody. We're trying to look ahead into the future as to what needs to be done. True, we need to understand the past, but all my concerns are directed towards where we're going to. It's not a question of putting blame on anybody, but it is a question of recognizing where certain responsibilities lie and the importance that, you know, some decisions are going to have to be made, you know, at some point, recognizing the situation and the challenges that are coming down the pike. You know, we just can't sit and wait for them to happen and then all of a sudden try to catch up. And that's the challenge. And that's what I'm encouraging, that let's not play catch up. Let's get ahead of this wave and, you know, make some of the decisions we need to make. Some of the decisions may be good. Some of the decisions may not be so good. But the important thing is that we are beginning to anticipate and act accordingly. That's all. So no blame being placed anyplace.
Okay. Thank you very much, everybody, for that discussion. Are there any other comments from other commission members on this particular issue? Okay. Jody, the one thing that was just very briefly mentioned was the e-Track-It issue. And that was what, about $500,000 unanticipated expenditure?
Correct.
So how is that being dealt with, and what impact does that have on the overall revenue projections and expenditure modifications? It seems to me as if increasing the amount of deficit that you were talking about.
Okay, so when we started to realize we were going to have to replace this software, this is the type of thing that we could and others have used CARES money from to implement it. It's something that adds a lot of remote capabilities to the software where it could be managed at home by employees and by citizens. A lot of it's online. But we know that we cannot get it, at this point, we cannot get it implemented before the December 30 deadline. So we can't, the CARES funding cannot be used unless we can expend it by December 30th, because those implementations take so long. So what we can do with our CARES money is we can cover public safety salaries. That was a blanket provision put out by some guidance we received back in the late spring, that public safety salaries in general are permissible CARES expenditures. So what we did with this expenditure is we moved some appropriations from fire and police. We moved those appropriations to planning and zoning so they could, actually it's planning and zoning so they can implement this software. And then we will move actual salaries, public safety salaries out of police and fire and move them over to the CARES fund and cover them with the CARES fund, which they're eligible for. So that's what we're doing. So it's a net zero impact on our deficit.
Okay. Any questions about that? Thank you for the explanation, Jody. Appreciate it. Moving right along. David, anything new on the State Resiliency Authority implementation?
Yeah, so we've continued to have meetings with the county. So Director Dickinson, Director Johnson, our Public Works Director, and myself are involved with that effort on the committee with the council to implement that. I think I mentioned in the last meeting that there's 3 subcommittees that are looking at, number one, the structure of the financing authority. And so I'm on that subcommittee. One that's looking at the projects that may be get funding, and Director Johnson is involved with that. And then the sources of revenue or funding, which Director Dickinson's involved with. We had a meeting on October 30th. Each of the subcommittees reported out. Each of the subcommittees' work is completed. So now the work on developing the legislation is beginning. The goal is to have the legislation to introduce at the county and potentially the city in January, because we wanted to have that done before the state legislative session begins, so that we can show that we've made progress. So that it moved along very well. It was a good process that was set up for that. Good reports from each of the subcommittees. And it's moving forward.
What impact, if any, has the whole COVID situation had upon the work of this group and the recommendations that are coming out of it? We hope that, I was going to say, we hope that COVID won't be with us forever, that there will be some end to it in the next couple of years. But it would seem to me there has to be some forethought given to the impact that's going to have upon ability to raise revenues, some of the expenditures, et cetera. So can you comment on that?
Yeah, and you just described the concern. So as far as the structure goes, no impact. As far as the potential projects go, no impact. As far as the revenue and funding side, big impacts. One of the areas that was considered early on was an increase in the hotel tax. That's a difficult one right now, as you can imagine, because the hotel tax is way down. And maybe Director Dickinson can address this from her subcommittee's perspective, but there's still some opportunities, but it's going to be much more difficult than it was pre-COVID.
Okay. Any questions of David on that? No? Okay. David, thank you for the explanation, and I look forward to hearing more progress at the next meeting, hopefully. Bob Burden, anything new on the SPAC the fact spending affordability subcommittee. I think when we last met a couple months ago, you and Ed Meehan were going to try and connect with the finance director and talk about how this issue can be moved forward without unduly burdening the staff. So anyway, anything to report today, or you want to hold that off till next month?
We'll just hold that off. Let me just say that both Ed and I did talk after the last meeting, and we had a direction that we were going to move forward on, and it was left to me to reach out to Jody and David. We are very, cognizant of the workloads that they have right now on their desk, and we wanted to propose a way forward where both Ed and I could reach out to gather some of the information that the fact is asking for without having to depend too much on David and Jody. I just have not reached out to Jody and David yet on what our thoughts were. And I'll proceed to do that here over the next week or so. And then we'll have something more definitive to report back at our next meeting in December.
Okay, great, Bob. Thank you. I will just put this on the agenda. You have to follow up next month.
Okay, and Ed, I'll follow up with you by phone call again so that we can regroup. Okay.
Sure. Yeah, we
Okay.
could. Yeah, it's a process. We're moving it forward, and we'll have some activity to report at the next meeting.
Okay, great.
Fred,
Yes,
just
Bob.
before you move on, have we touched upon the consolidation of services with the county in the agenda?
No, good catch, Bob. I apologize for that. Let me go back to David and Jody. It was reported in the press, and again, not giving any credence to it, but that different individuals were raising the specter of consolidation of some services with the county might be a way to help address some of the deficits and structural deficits by shifting costs. David, I heard what you said about if they don't pay for the cost from the city, then it's just going to be additional costs they're going to pay through their county tax bill, either through the tax differential or otherwise. But has there been any discussion internally within the administration or Ross within the council about looking at possible consolidation of any services with the county to deal with this financial issue?
Well, I'll jump in first because I'm basically going to turn it over to Alderman Arnett, because I think that we need to, during these work sessions that we have today and next week, Thursday, to broach that subject. I think we need to start having that conversation to see how much appetite there is on the council for doing that, because the next step would be, if the council is interested, the next step would be that we would reach out to the county and start having those discussions, which we have not done yet. But we really need to get a feel for the council's support of that. That's a big measure to move forward with if we're going to start that. And so we just want to make sure that everybody's in agreement that that's the right approach. So with that, I'll turn it over to Ross.
Thank you.
So my assessment of the council is that the biggest fear is loss of control, loss of autonomy, particularly things like clean water in, dirty water out, getting streets repaired, potholes repaired, sidewalks repaired. Those are pretty local issues, and they're pretty much bread box issues for each of us with our constituents. But the bigger fear is on public safety and the worry that we will come up second. I don't know how well founded that fear is, but it is certainly one I hear from constituents. And I actually even hear constituents say, although I don't believe it, we'll pay more taxes as long as we can keep control of police and ambulance services. When push comes to shove, I definitely hear people saying we don't want to pay more taxes, and they forget about that part of saying that we want to. There are other places that we can share with the county Parks are certainly one of them, and Rick Anthony and I have had a conversation a year ago over at Waterworks Park. He would love to see that consolidated control. I was surprised in digging into the line item budget last year, how much our spending in Parks and Recs is for parks, and how much part-time employees we do there. So it is definitely a pot of money. There is something I just have to say, it's an uncomfortable thing, but it's true. A lot of the potential places that people point to cut jobs are jobs held by African Americans. And that is just the fact. And it is something that we have to come to grips with. I have never favored cutting the bottom out of any department. To me, if we're going to make cuts, we have to go horizontally, cutting high price jobs as well as lower price jobs. But the racial politics, and it's something Sheila and I know each other now long enough, we can talk about very directly. And I'm not saying it politics in the bad sense. I'm saying it is a reality and is something we have to consider. So that's always a tough one. And it's why I think we shy away from having these tough discussions, because when you cut and where you cut is clearly going to make a big difference on who you cut. And that always very quickly comes into play, as it should. But that's whatever we're talking about people's jobs in a time with very high unemployment. So it couldn't be coming at a worse time. And we're talking about services. There are a lot of people who say, I don't go to the rec center, let's cut recs. Let's turn the rec department open. But there's a huge constituency that does go to the rec center, values it. So no matter where we look, these are going to be very tough discussions and are going to take a lot of courage. And we'll see whether we have it. I would have to say, and I'll include myself in this, council's not that long on courageous actions in the past. We've tended to take the easy way out, which usually means increased taxes. I'm not sure that's an option this time. I mean, it is an option, clearly, but I'm not sure that it's something that we can just say, we'll raise the property tax to come up with $9.5 million. That's a big tax rate increase. So, yeah, I mean, one-on-one, I just had a brief discussion with Brooks Schandelmeyer 2 days ago and with DeJuan 2 days ago about this. So we know individually what the tough issues are, and every one of us has our sacred horses. I'm very much interested in getting more funding for planning and zoning in a time when we're facing a $9 million deficit. But land use is gotten hugely complicated and is one of the things that you see occupying the city a lot. So we all have our sacred cows and places that we want to protect, and it's always the other guy's thing. But when you get together as a council, you have to look at that and listen to everybody on the council and then figure out where you're going to go. And that is not going to be a lot of fun, but I think it's very necessary.
Okay, thank you. Any comments from any of the FAC members? No? All right. Again, David?
I guess I would just add the comment that the council has made these hard decisions before, because you'll remember about 8 years ago, we contracted out solid waste. So we took a function, we actually did a managed competition where the workforce was able to bid for their jobs. Had a tremendous savings, quite frankly, by going to contract. The cost was about half of what it was for the city to perform those services. The fortunate thing is we kept vacancies open pending the results of that. And then we were able to place each of the employees that were performing that function into vacant positions. So that was a positive outcome, but that was a huge savings. That was enterprise fund savings. It wasn't general fund, but it was still sort of a model that we can do this. The council can make those hard decisions and we can actually carry those out appropriately.
Thank you, David. And I think the purpose of this brief discussion is just to, sensitize all of us, fact members, administration, council, through Alderman Arnett, of what we all know, that consolidation of services, of any services, is not easy. Maybe it doesn't happen, but it is one more tool in the toolbox that we need to realistically and honestly explore to deal with the unfortunate fiscal issues that we're confronting today. So I think that's all we can ask, that there be a good faith discussion, exploration of this and the other issues we've talked about. So moving on to new business, received the annual memo from Hillary that our FAC annual report is due on January 15th. I've asked our staff liaison, Kim, to prepare a draft of that report for us. She's indicated to me that she will do that. I don't know what Kim's schedule is, but I hope we'll be able to have a draft report for our next meeting on December 10th, so that we can review it. And if it looked good, approve it. If not, we'll still have enough time before the January 15th deadline to approve it on January 14th. Any questions about that? Hearing none. Hillary also reminded all of the boards and commissions that we're supposed to have elections for our officers again for next year. I don't propose to do that today, but I just wanted to mention it to all of you, and hopefully we'll have that on the agenda for next month. If anybody is interested in serving, let me know. I think I am still willing to serve as chair, and I think Bob Burden is still willing to serve as vice chair for another year, if that's the will of the group. But from my perspective, if anybody else would like a crack at taking over the chairmanship, just let me know, and we can discuss that. So that will be on the agenda for next month. Does anybody have any questions or comments on that issue? No, moving on.
Thank you, Fred.
Who was that? I was looking at my agenda.
That was
I
me.
heard a voice.
Just wanted to say thank you.
You're welcome. I'm not sure thank you for what, but you're welcome anyway. I sent out belatedly about 28 this morning the draft meeting schedule for next year that Kim very kindly prepared for us. Essentially, it called for the same schedule as we had this year, second Thursday of the month, except for November, when the second Thursday is the 11th Veterans Day. So that has been moved back to Wednesday, the 10th. And since you didn't have it, in sufficient time to really think and study it, I'll put that on the agenda for next month for approval. But essentially, it seems to me it's worked out well for everybody, as well as reasonably expected, and I would hope that we can keep to the same schedule. I suspect we'll continue with these virtual Zoom meetings for the foreseeable future, if and when situation ever resolves itself to the point that we can meet in person. We'll switch over to in-person meetings, but I think we should just consider our meeting schedule as the second Thursday of the month, except for next November, by Zoom or other remote virtual platform. Any questions, comments? No, hearing none. And again, that'll be up at our meeting next month for final approval. And Jim Cardillo asked me to place on the agenda for today, at least to get it on the agenda, meeting topics, agenda topics for next year. And I think that's something we all need to think about. What is there that we may have been talking about during this year that we may have said, well, that's something we want to tackle as a group, or we want to deal with in the future? I'm sitting here today. I'm not prepared to say what those are or if I have any suggestions or recommendations. What I would ask is that each of the commission members and staff for that matter, or Alderman Arnett, if anybody wants to weigh in at the next meeting, with suggestions for things that the FAC should deal with next year in a proactive rather than a reactive basis, let's hear them so we can perhaps make a list of those and get them on the agendas appropriately. I know one thing obviously is the FAC Spending Affordability Subcommittee, work and recommendations, whatever they may be, after Bob, you and Ed meet with Jody and David or discuss with them, your thoughts and come up with a game plan as to how to move, that forward. Beyond that, sitting here today, I don't have any specific, recommendations for agenda topics on a proactive basis. So, Jim, is it okay if we defer that till next month?
Thank you, Fred. All I just wanted to do is notify the commission members, hey, we should start planning ideas. I don't want it as an agenda. It wasn't really subject to discussion today, but be prepared on the next agenda in December to start
Okay.
talking. Go ahead, Bob.
Right. Bob?
No, Fred, could you share Jim's suggestions with the rest of us so that we may not duplicate, but
Yeah, well, he hadn't shared any suggestions with me.
oh,
just asked
okay, I'm
me-
sorry. I thought he gave you a list.
No. Let's put it on next month's agenda kind of thing. Let's be prepared in advance to look at agenda topics for 21 on the December meeting.
Okay.
Yeah, when I sent out the email to the FAC members saying, if there's anything else you want on the agenda, let me know. Jim chimed in and said, how about putting on whatever I have here, 2021 meeting agenda topics. So I said, okay, that's fine.
Thank you.
Sure. Anything on that particular item? If not, our next meeting will be December 10th at 8 a.m., presumably by Zoom. And Hillary, I assume that you'll send out, Hillary or Kim or somebody will send out the Zoom instructions prior to the next meeting. And please remember to send them to Faye at the address that she gave to you guys the other day. So we don't have any, problems. And it worked out apparently they did get it to you correctly, Faye? Yeah, okay, good. Anything else for the good of the order today? If not, again, to FAC members and to Jody and David and Ross, thank you all for your hard work in these very, very difficult times. I know that some of the discussion today was a little difficult, and it may have seemed as if it was a little bit confrontational, but I don't think it was intended by Bob that way or by anybody else that way. I think we're all looking to achieve the same goal, and I think we all want to ensure that there is a reasonable, rational, thoughtful process to addressing any potential fiscal issues before they arise, so we don't find ourselves like we did years ago in fiscal calamity. So let's all keep up the good work, and I'll entertain a motion to adjourn. Nobody want to adjourn? Okay.
So moved.
Okay. Made by Jim, seconded by Bob.
Bob?
All in favor, signify by saying